Divergence detected. Apple dropped more than 7% today, the market's single largest component, and the SPX still closed green. The backend flagged that the moment data came in. The #1 ranked stock and ETF from SignalFinder Pro's Best of Best are both still ahead. The SPX finished up about 0.7, and the QQQ matched it. The Nasdaq absorbing Apple's 7+% drop without cracking. It's not a clean read, though. The NDX's weekly signals have been in bearish territory for 3 weeks running, and the VIX was flagging an elevated probability of a down day in one of the next 2 sessions. Breadth and high-yield bonds aren't running with the headline. The close looks green. The structure underneath reads differently, and the bond market's message was even louder, which is exactly what matters next. The bond rout deepened Friday. The 10-year closed at 4.75, up 7 basis points from Thursday, and 3 FOMC members dissented hawkish on the session. The 30-year is sitting at 5.27, levels the bonds market hasn't seen since the run-up to the financial crisis. Real yields are pressing against a multi-year high, and that's the direct pressure line on gold and silver. The commodity supply shock feeding that inflation read has its own story, running on a separate track. That's where the backend's data gets more specific. Crude squeezed higher, a nearly 4% advance, as Strait of Hormuz disruptions baked a geopolitical risk premium into WTI, settling close to $87. XLE and XOP both followed it up. But refiners were the exception. CRAK slipped, even as crude ripped, because crude outran finished product prices on the session. That's what crack spread compression looks like on a chart. It's a structural read, not a one-session blip. And the same inflation pressure crude is building is the force feeding directly into what real assets did next. Gold pulled back about 1.5%, and silver dropped more than 2%, both under real yield pressure as tips threaten a multi-year high. If real yields clear that level, a key structural prop beneath gold gets removed. Here's where the data splits, though. ETF outflows are running against central bank accumulation on the buy side, and those two forces don't resolve in the same direction. The chart says down. The structural case complicates it. International flows are showing that same kind of split, just playing out across different regions. The international read split hard on the session. Taiwan was the clear standout. EWT jumped nearly 3% on AI chip demand, and emerging markets followed with a gain. The developed side ran the other direction. EFA finished lower, and Japan's EWJ dropped close to 1% despite currency intervention headlines. Taiwan and the AI supply chain are running on their own logic, largely detached from the macro headwinds dragging the developed tape. European geopolitical stress added another layer of pressure to the developed read. That same tension between momentum pockets and macro drag is playing out in crypto right now too. Bitcoin sold off nearly 3%, sliding to about 63,000. And the pressures underneath match the move. Strategy disclosed an $8.3 billion unrealized loss in Thursday earnings, and a record options expiry cleared, roughly 148,000 contracts on the session. BTC has slipped just under its 50-period daily moving average. Staying below it puts the remaining bullish signals in question. Here's the split. On-chain accumulation and ETF inflows are still running positive, even as the technical picture deteriorates. The data doesn't agree with itself here. And with that level of cross-asset divergence in play, what the ranking engine actually surfaced at the top is the more interesting question. Apple's meltdown and the bond rout put the whole bias signal under stress today, and the #1 stock this scan surfaced is still ahead. SignalFinder Pro's Best of Best ran 134 symbols through the ranking engine as of today's close. The system filters the full universe down to what's scoring highest on the multi-factor read. Structural positioning across a wider window, not just the day's action. Here's what came out at the top. The sector board has financials at #1, healthcare in second, and real estate in third. All 3 closed slightly lower on the session, and that tells you the ranking engine is reading something beyond the daily tape. It scores structural position across a longer window, so a sector can hold the top 3 slots while the day's move is soft. The backend flagged this setup. Financials ranked first in an elevated yield environment isn't random. Those two things don't usually move in the same direction. CRAK, the Van Eck Oil Refiners ETF, takes the #1 ETF rank today, and it closed down about 1% on the session. The story. Refiners slipped while crude actually rose because crude outran finished product prices. That crack spread compression is what you're looking at in the chart. CRAK is a basket of the world's major refining names, so it scores on that margin, not on crude itself. The ranking engine's longer run read put it at the top regardless of today's direction. Signal state is watch. Fortinet takes the #1 stock rank, closing up nearly 5% on the session. What the scan flagged wasn't just the single name move. It's that the whole cybersecurity group moved together, not one name outrunning its peers. Group-wide participation is a structurally different signal than a single stock pop. That's what separates a durable leadership read from noise. FTNT is at the top of the list with signal state wait. The ranking engine has it ranked first, while the entry signal hasn't triggered yet. That gap between rank and signal state is the data point to hold. Apple down more than 7% on double the usual volume. The SPX still green. The backend read that as absorption, not exhaustion. The thing to watch tomorrow. Does the 10-year hold at 4.75, or does it push higher and start bending the equity read that held up today? CRAK and FTNT are both live in SignalFinder Pro. Verify their signal states there before drawing any conclusions. And remember, this is educational, not financial advice. Do your own homework.